Ladies and gentlemen, good evening. This is Christopher Aaron. It is the 31st of January, 2018, and thank you for your attention. This is a fairly important video. This is serious, what we are seeing here in the final meeting of the Fed Chairwoman, Janet Yellen. Let's take a look at this from the standpoint of a precious metals investor. What are some things to consider from this meeting? And first, the official policy decision today by the U.S. Central Bank was, once again, of no change in interest rates. So there was no change at this meeting. We did have a rate hike at the last meeting. The odds right now, as being priced in by the futures market, is that there will be a rate hike at the upcoming meeting in March, which is 6 weeks from now. However, we will pay attention to a lot of leading signals that can give us a more accurate picture as to simply what the futures market is expecting. So no change in the interest rates. Now, what was even more incredible, though, at this meeting was not so much the policy statement by Janet Yellen and the Fed, which was basically status quo, just saying that unemployment is doing well, inflation is moderate, blah, blah, blah. What was so incredible about this meeting was the interview that was given right after the meeting by former Fed Chairman Alan Greenspan, who was the head of the Federal Reserve from the mid-'80s through 2007. And it seems to be in his later years that Mr. Greenspan has found religion, so to speak. This was one of the most incredible interviews that I think I've ever heard from someone who used to be a chair of a central bank. And I want to read to you, I just wrote these quotes down in real time as I was watching the interview today. So please excuse me if there's one word here or there that is minorly off from the actual quote, but this is the gist of it. Look at some of these quotes. The breakout in inflation is going to be to the upside. The only question is when. I mean, this is one of the biggest no-nos in the playbook for central bankers, to admit that there is going to be inflation coming around the corner. And here we see Greenspan in his later years. It's almost like he just doesn't give you know what anymore. And he is just saying what he wants to say at this point, despite what the central planning powers would think is in their best interest. So inflation to the upside. And of course, we know inflation is not a rise in prices. That is what the mainstream media will tell you. Inflation is an increase in the money supply, which causes a rise in prices. Let's not put the cart before the horse. Another quote here: there are bubbles in both the stock market and the bond market. I swear to you, he said this today on live TV. Now, we've been talking about this. We did a special update on this for premium subscribers in the last video, which went out 3 days ago, and we were looking at how this stock market bubble is shaping up, some projections for it. So we're looking at that, but even more incredible here is that he talked about a bubble in the bond market. And of course, the bond market being the central funding mechanism for the entire United States government. So if there's a bubble in the bond market, and this is what's kept the government able to spend all this money on unwinnable wars overseas, which is something that I will be speaking about more in the future, as it is something that I have direct experience with, spending a year in Afghanistan. Also, the bailouts against the banks and the financial sector. You know, the bond market is the central funding mechanism for all the unsustainable spending. So how is this going to work if, as Greenspan is saying, there is a bubble in the bond market? This is going to be an absolutely fascinating time to be alive. We haven't seen anything like this in the last 2 generations. So this is truly, the playbook is being written as we go along. The interviewer asked a question: what is the cause of the bond market bubble? I can't believe she actually asked that. And his response was ever larger government deficits, soon to exceed the debt to GDP ratio of World War II. So we're talking about the unsustainable spending, once again, soon to exceed this ratio, which is the amount of debt that the government owes versus the total product. What do all the citizens of the country produce? So this ratio is soon to exceed World War II. Let's bring up the actual ratio and take a look at this. Sure enough, here, getting toward the end of this decade, it has been almost 70 years, but we are approaching, think about this for a moment, we are approaching the debt to GDP ratio that was seen in the largest international conflict in human history. We are approaching that now. Why? What has all this spending gone toward? Certainly not to defeat a regime that was attempting to take over most of Europe and most of the free world. So where did that spending go toward? What do we have to show for it this time that we do not have to show ending this conflict, which we are calling World War II? Incredible quotes here by Alan Greenspan. And I just want to remind you of something. This is the man who, in 1966, had this quote: "In the absence of the gold standard, there is no way to protect savings from confiscation through inflation. There is no safe store of value. Deficit spending is simply a scheme for confiscation of wealth. Gold stands in the way of this insidious process. It stands as a protector of property rights." So you can see it looks like Greenspan here is coming full circle, right? He understands what's really happening here in the grand scheme of things. He understood it. He took a detour for 15 or 20 years to head the Federal Reserve, and now he is coming back. He's coming back to speak the truth in the later years of his life. And it's better to have it a little too late than never at all. That's what I say about that. So thank you, Greenspan, for that excellent interview today, if you are listening to this broadcast. Let's look at how the precious metals responded. It was quite a choppy day today here, I'll tell you. I mean, we are still looking at what I suspect to be a period of weakness that needs to come into the price of gold. We had seen that over the last 5 trading days, and then today, an initial sell-off after the Fed meeting. And I will tell you, I think this was right around when Greenspan began to speak. Here was the initial sell-off on the Fed non-decision for interest rates, and here was Greenspan speaking. So quite an interesting move today in gold. We'll see what happens over the next few days. And also a nice move in silver, not recovering recent prices, but looking like an intermediate term pop wants to happen here. I still suspect there may be some lower prices coming over the next several weeks and several months. And so what was Greenspan talking about, the bond market bubble? Let's just put this into perspective. If you're new to studying the precious metals, I just want to show the real big picture perspective where we are. So we are looking here at the federal funds rate. This is the way to think about this. These are the shortest term bonds that are available in the United States system. These are the overnight short-term bonds that the Federal Reserve controls. This is the rate that they control directly. And we can see there have been basically a period of over 25 years of rising rates from the 1950s through the peak in 1980, and then a period of 35 years, almost 36 years of falling rates. Let's call it a generation in each direction. And where are we now? We have just begun this next cycle of rising rates. You can see how much variability there could be, not anytime soon, but into the next 2 or 3 decades. We could be looking at a period of rising rates. And so the mainstream media narrative here, of course, we want to think about this. Where is the bubble, right? Where is the bubble in bonds that Greenspan was speaking about? Was it up here? No. The bubble was down here. Because remember this, interest rates and prices move in opposite directions. So when we speak about a bubble, you have to flip this graph on its head because we're talking about rates here. So the bubble was in the low rates, and we are just coming off the bubble right now. And it's interesting just to think about this. Remember, if you read the mainstream media narrative, and they will say rising rates are bad for precious metals. If you're new to the metals, I just want to pull up the graph of gold for this exact period right here. This is accurate to the scale. You can see 1960, 1960, 1980 matching up perfectly. Look what happened in a period, in a generation of rising rates. Gold rose over 2,000% during that time. So if you think about this, and we are right here once again, and it looks like a new cycle is setting up that is going to last for many years and possibly even several decades. I would tell you, keep a look at this chart here because it looks like something like this is going to be setting up in the price of gold. It will not move in one direction. However, we can see that there are drawdowns in the price of gold that happens during this time, and we've seen over the past 6 to 12 months, a lot of people can get frustrated and washed out of the market, even when there's a larger picture development happening here that we must pay attention to. So once again, the bubble was right here. The bubble was the 0% interest rates over the last 7 years. And the bubble is just beginning to burst, according to Mr. Greenspan. This is not my words this time. This is Greenspan's. Although, if you go back and watch 3 videos ago, we made a video covering not the short-term bond rates, which we just looked at, but the long-term bond rates. Those have a slightly different picture, but the analysis that we presented then 3 weeks ago was that a bubble is also bursting in the long-term bond at the same time as we're seeing short-term rates that look like they're bursting as well. Thank you very much for watching. Just to let you know, I do produce a premium research service which comes out every week. We do a monthly video which is like this, but much longer and more in depth, and we also do weekly updates in between. We cover macro stuff such as this. We also cover the recent analysis, what to expect in the price of gold, silver, the GDX, and the individual miners that we are buying and selling here, as well as all the research to back that up. I also work with individuals just to let you know on a one-on-one basis. We do this by voice and by Skype and by phone. And I simply look out for the best interest of my consultation clients. I take no money from any of the funds or the companies that we profile, but we do an assessment. We do a what would I do if I was in your situation. If you're a new stacker, this may be how to understand the different pros and cons of various forms of precious metals, coins versus bars versus ETFs. And if you're more experienced, I also work with advanced traders. We talk about different strategies for trading futures and options, as well as the mining stocks. Thank you once again for tuning in. The quotes by Greenspan today, I think, were the most significant thing that we've seen in quite a long time following these markets. And we will see, does the bond market confirm what Greenspan and us here have been highlighting over the last 2 years? Does the bond market really begin to sell off? If so, that will be the first time that this happens in approximately 70 years. The first time that we're seeing a peak and a decline in bond prices from a bubble level. First time in 70 years. Basically, no one alive today was an investor at that point, so no one knows what to expect. But if we just recall that chart of the price of gold, as bonds were selling up and the inverse, the yields were rising, we can see that all things considered, should be a positive environment for gold over a long-term time frame.